Today is April 24, 11:33 a.m., and we detected unusual options on Activision Blizzard. ATVI is the ticker symbol. They are the creators of Warcraft, Diablo, StarCraft, and many other games. They will be reporting earnings, so keep that in mind. And so that is on. So as usual, we will go through 3 steps. First, we will identify these unusual options. And then, number 2, we are going to analyze them. And then, third, we will trade with that information because it is a different trade than what we saw on the unusual options. So here is the options tape, and you'll see that at about 10:18, you'll see here these 1,000 contracts for the 89 strike calls. But then you'll also see just 18 seconds later, another 1,000 contracts comes in, but at different strikes. So what is going on here? Because we believe this is the same large institution doing this trade. And so this is definitely an earnings trade because this expires after earnings. So what they're doing here is when we look at the options chain, you'll see here on the April 28th, the 89 strike calls are right here. There's 6,000 of them for today, the volume here. And then you'll see here the 92 strike calls, also 6,000 volume. And you'll see this is greater than the open interest, and also this is also greater than the open interest at the 89 strikes. So we know these are open orders. So what they're doing is this 89 strike calls, selling the 92 strike calls, and creating a vertical call spread, which is bullish, as you can see here when we analyze this. As the price of 89.5 current price goes up on the x-axis here, this increases in profit because this is above the profit loss diagram of 0 here. Anything above this is profitable. So this is bullish directional trade. And so when we look at the Greeks for this, you'll see that it's actually a bullish delta here, positive delta. But the problem here that we see is the negative 18 theta decay. So we don't like this very high negative theta. It is because it is expiring in this week. So that's why it's a very bullish bet for this to happen. So what we did a slightly different trade than this so that we can try to reduce our theta decay. And so what we did was, instead of buying the 89 strike calls here, we sold the 89 strike calls because of this volatility. You see here it's at 72.9%. We like to sell volatility when it's high. And since today there was a lot of activity at this strike price, that's a higher volatility, we sell it. And then what we did was we bought the May 19th, which expires 25 days later, and which will have a smaller theta decay. So we buy the 87.5 calls here. And you'll see our position here. And this is that. And you'll also see that volatility is much less at 38.7. So we like to buy volatility when it's lower and sell a higher volatility that you're trading options. And so when we analyze this trade, what you'll see here is this is a diagonal bullish trade. It's going for about 138 at this time. And then also you'll see as the price goes up, this will be above that 0 profit loss on the y-axis here. So it's profitable as the price goes up. And you'll also notice something interesting is that this price of 85 can actually go down all the way here. This is our break even, and we won't be at a loss. And this is the advantage of selling the volatility, is that we get this leeway. So actually 82.7 was about our break even. So 82.75, there we are. So at expiration on April 28, this stock can drop to 82.7 and we won't be at a loss. In comparison to the unusual options, if this drops down to 82.7 at expiration, you're at actually 100% loss, because you'll see once it's at expiration, April 28, you're all the way down to you're losing all of your initial investment. So that's the problem with the theta decay here. So and you'll also, so if we look at our trade here, our diagonal trade here, you'll see that our theta is actually positive. That's why we like this one. And we still also have that positive delta. Now, if you want a higher delta, you can just buy more of these diagonal bullish trades, right? And so this break even of being at 92, 82, we like that, because if we look at the charts, 82 is down here, right? So this stock, after earnings, it could drop all the way down to 82. And that's our break even, right? We won't be at such a large loss here. And so that's what's great about this trade that we're doing. We base it on the unusual options, but we don't want to take on that higher risk with the theta decay. So yeah, if this was helpful to you, please smash that like button and subscribe if you haven't. It really helps our channel grow so we can continue to put content out there